Texas housing isn't just slowing down, it's collapsing. Millions of homeowners are trapped. In Austin alone, 70,000 homeowners are underwater. But even those breaking even can't move, stay, or refinance. These are people who did everything right: good credit, solid incomes. But soaring costs are crushing them. Insurance jumped from $750 to $6,000 a year. Property taxes rose $5.4 billion statewide. Home values in Austin dropped 15.5%, wiping out over $200,000 for the average homeowner, while monthly costs skyrocketed. The idea of Texas as an affordable paradise? Dead. And it only gets worse from here. The insurance nightmare. Everyone ignored. Nobody talks about this until it's too late. Let me show you what's actually killing Texas homeowners. Forget your mortgage rate for a second. That's not what's forcing people out, it's insurance. Your mortgage stays the same every month. Insurance can double, triple, or increase 8 times in a few years, and there's no locking in a rate. In 2024 alone, Texas insurance rates went up 28%, on top of a 21% increase in 2023 and 19% the year before. That's a 49% cumulative increase in 2 years. Let me put that in real terms. The average Texas homeowner is now paying $4,585 a year for insurance. That's 117% higher, more than double what the average American pays. And in some parts of Texas, people are getting quoted $10,000, $15,000 annually. There's a guy named John from Clear Lake near Houston. In 2000, he paid $750 a year for home insurance. Want to know what he pays now? $6,000. And get this, his deductible is $9,000. So he's paying 8 times more for worse coverage. After 2 straight years of 25% annual increases, he told reporters, "This increase can't continue. It's unsustainable. We're going to have to make some decisions." Translation, he might have to sell a house he's owned for decades because he can't afford to insure it. Now you might be thinking, okay, but why is insurance going crazy in Texas specifically? Here's what nobody tells you. In 2024, Texas had 169 tornadoes, the most of any state. It had 878 major hail events, nearly double Kansas, which came in second. The state experienced $20 billion weather disasters. Hurricane Beryl alone caused $28 to $32 billion in damages. And here's the kicker. Private insurance companies lost money every single year from 2018 to 2022 in Texas. Their average loss ratio was 102%, meaning they paid out more in claims than they collected in premiums. They left. Progressive stopped writing new policies in Texas entirely. Lemonade pulled out of 12 counties around Austin. State Farm and Allstate are raising rates and dropping customers. The state's backup insurer saw policies jump from $184,000 to $243,000 in 2 years. After Hurricane Beryl, only $8 million in reserves for 2025, $8 million to cover potential billion-dollar hurricanes. 1.1 million Texas homeowners, 9.5% of all homeowners, are living without any insurance. They can't afford it. They're gambling daily that a tornado doesn't destroy everything. Your insurance up $500 monthly, property taxes up, home value down 15%. You have 3% mortgage but would pay 6.5% to move. Can't refinance. Can't sell, can't afford to stay. You're trapped. And here's what makes it even worse. Property taxes. Politicians keep promising relief. They had an $18 billion property tax relief package in 2023. Big press conferences, victory laps, the whole show. They increased the homestead exemption from $40,000 to $100,000. Total property tax bills increased by $5.4 billion in 2024. That's 6.6% in 1 year. Counties up 10.4%, schools up 6.4%. So where did that relief go? Appraisal districts raise property values to counteract it. Your exemption up, assessed value up. Tax bills went up anyway. Jerry Sunnier, we saw an actual increase in 2023 versus 2022, even after our relief. It's all smoke and mirrors. Property taxes went from $19 billion in 1998 to $81 billion in 2023. That's 328% over 25 years. Faster than inflation, wages, or population growth. Unlike California's Prop 13 caps, Texas has no limit. Your Austin home worth 20% less? Tax bill probably didn't drop 20%. Might have gone up. The typical Texas homeowner spends $1,400 monthly beyond mortgage. Insurance, taxes, utilities, maintenance. For fixed incomes or recent buyers with high rates, it's crushing. But wait, because this next part is where everything really falls apart. Let's talk about Austin, the canary in the coal mine. These numbers are staggering. Austin was the poster child for the Texas boom. Tech companies from California, Elon Musk moving Tesla headquarters, Joe Rogan, tons of podcasters. Prices exploded 60% in some areas from February to May 2022. Prices have fallen 15.5% from peak. That's $215,000 to $222,000 in lost value, from around $667,000 down to $445,000. Here's what makes this historic: 34 consecutive months of year-over-year price declines through July 2024. Nearly 3 full years of falling prices. This is the biggest metro-level correction in America. If you bought an Austin home in 2021 or 2022, near the peak, you're down $200,000 plus in value. And remember, you also have to pay 6 to 8% in transaction cost to sell. So you'd need to bring $230,000 to $250,000 just to break even and get out. Most people don't have that kind of cash sitting around. Now you might be wondering, why did Austin crash so hard? Here's what nobody saw coming. In 2024 alone, Austin lost nearly 4,000 tech jobs. Tesla cut 2,688 employees at its Gigafactory. That's 10% of the workforce gone. Intel laid off 251 people in Travis County. Indeed eliminated about 1,000 jobs globally, hitting its Austin headquarters. And Oracle? They didn't just lay people off. They moved their entire headquarters to Nashville after being in Austin for only 4 years. Then you've got Dell cutting 13,000 jobs globally. Bumble cutting 350 employees, 33% of their workforce. Rooster Teeth completely shut down. Microsoft, Expedia, YouTube Music, BigCommerce, Wayfair, the list goes on and on. Austin's inventory exploded by 342% over 2 years. 342%? Meanwhile, the rest of the country actually saw inventory drop 22%. Austin is drowning in homes for sale while demand evaporated. In December 2024, there were nearly 133,000 total listings in Austin Metro. Days on market hit 55 days, and here's where you can see the desperation. 48% of Austin listings had price reductions. That's compared to a 33% national average. Nearly half of all sellers have had to cut their asking price just to get any interest. And it's still not working. Nearly 7% of Austin mortgages are now underwater. That's about 70,000 homeowners who owe more than their home is worth. The rent situation? Also terrible. Austin rents fell 4.3% year over year to $1,505 as landlords compete for tenants in an oversupplied market. But here's what should really scare you. Austin's the headline, but other Texas cities aren't safe. San Antonio down 4.4 to 4.6% year over year, around $305,000 to $315,000. Sales dropped 10%. Inventory at 5.3 months supply, 6 months is balanced. Days on market, 58 to 59, and 31.7% of listings have price cuts. Inventory surplus, 52%, highest of major metros. Some counties saw 14.6% drops. Zillow predicts another 1.7% decline through 2025. Dallas-Fort Worth is holding better but cracking. Median $385,000 to $394,000, down 0.6%. Fort Worth down 2.5% at $325,000. Inventory at 20-year highs. Dallas County, 885 listing cancellations in 30 days, up 42%. Sellers pulling listings rather than accepting lower prices. Days on market hit 27, highest in a decade. Sale to list ratio, 97.1%. And 34.3% had price reductions in April 2025. Houston is the most resilient. Median $335,000 to $337,000, up 1.5%. Only major metro with growth, but showing stress. 4.0-month inventory supply, up 21.6%. Days on market, 61. Sale to list ratio hit 92.6%, lowest since 2001. Home selling 8% below asking. Biggest vulnerability? Oil at $57 per barrel. Many operators shutting down. If oil stays low, Houston employment crashes, cascading into housing. And this next part explains why the whole Texas story fell apart. The migration boom that just reversed. This should terrify Texas property owners. The entire boom was built on one thing, and it vanished. Texas was #1 growth state. U-Haul ranked it #1 from 2021 to 2023. People flooded from California, New York, Illinois, fleeing high taxes and costs. In 2024, Texas dropped to #2. U-Haul arrivals up only 1.5%, departures up 2%. State hit 50.3% arrivals versus 49.7% departures. Balanced equilibrium, not growth. Atlas Van Line's Texas migration completely balanced 50-50 in 2024. In 2023, it was 56% inbound, 44% outbound. Complete reversal. City by city, the decline is steep. Austin dropped from 41,655 migrants in 2023 to just 16,969 in 2024, a 59% collapse. Dallas fell even harder, from 35,229 to 12,927, a 63% decline. Houston went from 39,461 to 21,240, a 46% drop. San Antonio decreased from 30,103 to 18,981, a 37% decline. And Fort Worth saw numbers fall from 21,180 to 11,623, a 45% decrease. Every major metro saw migration fall 37 to 63% in 1 year. Structural breaks. Census data. Texas net domestic migration fell to 85,267 in 2024, down 36% from 133,000 in 2023. In 2022, it was 222,100, a 62% decline in 2 years. International migration now accounts for 57% of Texas growth versus 25% in 2021 to 2022. Texas demographer. Our population will start declining without immigration. Build for 200,000 migrants, get 85,000. Oversupply, inventory explosions, price cuts, desperate sellers. And this brings us to the trap millions of people are in right now. Everything comes together into the Texas homeowner trap. It's hitting millions from multiple directions. You bought in 2021 to 2022 at the peak. Maybe you're in Austin, paid $550,000 for a home, now worth $450,000. You're $100,000 underwater before the spikes to 8% transaction cost to sell. To actually get out, you'd need to bring $130,000 to $140,000 in cash to closing. Most people don't have that sitting around, so you can't sell. Even if you could somehow break even on the sale, moving makes absolutely no financial sense. Your mortgage rate is probably 4.5 to 5.5% because you bought when rates were starting to rise back up. If you wanted to move to a comparable home today, you'd be financing at 6.5%. Your monthly payment would jump 30 to 40% for the exact same house. You're trapped. Or maybe you're in a different situation. You bought before 2021, and you have a 3% mortgage. Your home has appreciated nicely. You're not underwater. But your insurance just went from $2,000 to $4,500 per year. Your property taxes went up another $1,200 annually. That's $3,700 more per year. Over $300 per month in increased costs that have absolutely nothing to do with your mortgage payment. You think about selling and downsizing, but then you remember you have a 3% mortgage rate. If you sell and buy anything else, you're getting a 6.5% rate. On a $400,000 loan, that's the difference between a $1,700 monthly payment and a $2,500 monthly payment. So you'd save some money on insurance and taxes by downsizing, but you'd lose $800 a month on mortgage interest alone. The math doesn't work. You're trapped. First-time buyers can't get in. Maybe you're renting and you've been waiting patiently to buy, thinking prices would eventually come down. Good news, they have in some markets. Austin is down 15%, San Antonio down 5%. But the median Texas home now requires an income of about $100,400 per year just to afford. Only about 42% of Texas households can actually afford the median-priced home. And here's the truly cruel part. 51% of Texans earn less than $75,000 per year, but only 17% of the for-sale inventory is affordable at that income level. You're trapped out of homeownership entirely. Your home value dropped 10% in the last 2 years. Your equity evaporated. You can't refinance because you'd be giving up your 3% rate for 6.5%. And you can't get a HELOC because the bank won't lend against reduced equity in a falling market. Your equity is trapped inside the house, completely inaccessible. Texas was one of only 3 states that posted annual equity losses in Q2 2024. Average homeowner lost $2,600 compared to a national average gain of $25,000. Delinquencies up 66 basis points in Q1 2024, 4th highest nationally. Q3 2024, 24 basis point increase, largest of any state. These are qualified homeowners crushed by insurance, taxes, and inflation. Not a lending crisis like 2008. A cost crisis hitting people who did everything right. Some 23% of struggling homeowners skip meals to afford payments. That's a humanitarian crisis, and it's about to get worse because of what's coming. The supply tsunami. Texas keeps building massive housing while demand evaporates, and it can't stop. Texas issued 136,374 single-family permits through October 2024, up 9.7% year over year. Second highest year in Texas history. Led the nation by 20,000 permits ahead of Florida. Builders calibrated plans based on 2020 to 2022 demand, 200,000 plus migrants yearly. That Texas no longer exists. Builders can't stop. In quarter 3, 2024 alone, the 4 major metros issued 61,400 new permits, up 11% year over year. Houston permitted about 45,000 units in 2024. Dallas-Fort Worth permitted roughly 40,500 units. New housing starts were running at over 13,000 units per month statewide. All those homes getting built right now, they were planned 18 to 24 months ago when the market looked completely different. And here's the thing about construction, it can't stop on a dime. Projects that broke ground in 2023 or early 2024 are completing now. Builders have land under contract, financing in place, construction in progress. Even if they wanted to stop today, thousands of new homes are still coming over the next 6 to 12 months. What happens when supply surges 30 to 50% above normal while demand falls 40 to 60% from peak? Prices have to adjust. It's basic economics. One analyst reports that 27.7% of all Texas listings had price reductions in April 2025, the highest since he started tracking the data. In 2021, during the boom, only 8.1% of listings had price cuts. We're now at 3.4 times that level. In Midland, Texas, 39.4% of listings have been reduced. Dallas, 34.3%. Austin, 33.6%. San Antonio, 31.6%. The median price reduction statewide is about $14,550, roughly 4% of the asking price. Over 70% of closed sales in Q1 2025 involved price reductions of $5,000 or more. That's the highest percentage since 2011. And yet homes still aren't selling quickly. Days on market has increased to 74 days statewide as of October 2025, up 13 days year over year. During the pandemic boom, homes were selling in under a week. Only 10.6% of Texas homes sold above list price in October 2025. During the boom, 30 to 40% were selling above list with bidding wars. Those days are gone. This is a market in transition from extreme seller dominance to buyer control. And with thousands of new homes hitting the market every month while migration has collapsed and existing owners are trapped by rate lock, the imbalance is only getting worse. Now let me show you what the experts who were right about this are saying. Let's talk about what the analysts who actually predicted this correction are saying about where it goes from here, because their warnings are getting more severe, not less. Nick Gurley is CEO of Reventure App, and he's been the most accurate bearish voice on Texas. He's calling for a 4% statewide price drop over the next 12 months minimum. For Austin specifically, he said, I could see a 15 to 20% correction in the cards, especially if there is a recession in the oil industry. Remember, oil is already at $57 per barrel, below the threshold where many Texas producers shut down. Gurley's analysis is blunt. Texas is now the 4th most oversupplied housing market in the United States. Values are down 0.7% over the last year and have dropped 1.6% from the middle of 2022. Buyer demand keeps dropping and listings keep rising. So long as Texas remains this unaffordable for local buyers, its housing market will struggle. He notes that Texas homes are currently overvalued by about 17.7% compared to historical norms and expects them to still be 10 to 12% overvalued by the end of 2025. That implies more price declines ahead. Marco Santarelli from Norada Real Estate published research predicting that 31 Texas cities will see price declines by the end of 2025. He's calling it a major correction phase. Some cities are expected to drop dramatically. Pecos down 9.5%, Zapata down 7.2%, and Sweetwater down 6.9%. Even the major metros are on his decline list. Austin down 0.4 to 3.8%. Houston down 1.1%. San Antonio down 1.7%. Chen Zhao, an economist at Redfin, classified Texas alongside Florida as weaker Sun Belt markets, where buyers may be able to negotiate the best deal and have the most selection this year. That's analysts speak for prices are falling and sellers are desperate. The most dramatic warnings came from Mark Zondi at Moody's Analytics back in 2022, and they've been proven exactly right. He assessed Austin as overvalued by 61% and predicted 5 to 10% declines under normal conditions, and 15 to 20% if there's a recession. Austin has already declined 15.5%. He nailed it. Even CoreLogic's chief economist acknowledged softening markets in Texas and Florida and noted that Texas is dragging down national home price gains. The consensus among bearish analysts, the ones who've been right, is that Texas faces three main structural headwinds: collapse in migration, excess supply from builders, and an affordability crisis driven by insurance and taxes. These aren't temporary problems. These are fundamental changes that require significant price adjustments to restore equilibrium. So let me tell you what I think happens next. Based on all the data, here's what's most likely going to happen to Texas housing over the next 12 to 24 months. And I want to be straight with you. It's not pretty. Austin might be close to done. Austin has already taken its medicine with a 15.5% decline. Most analysts think Austin is closer to the bottom than the beginning, especially if we avoid a recession. The tech layoffs have already happened. Migration has already collapsed. Prices have already adjusted significantly. But if oil prices stay depressed and we see broader economic weakness, Austin could fall another 5 to 10% to hit that 20 to 25% total correction range. What happens in Dallas? Dallas-Fort Worth is probably in the middle innings of its correction. Prices have softened but haven't crashed like Austin. With inventory at 20-year highs and sellers canceling listings rather than accepting lower prices, Dallas is in a standoff. Eventually, sellers will capitulate. Expect Dallas to follow Austin's path, but with a 6 to 12-month lag and smaller magnitude, maybe a 5 to 10% peak to trough decline total. Houston could crash. Houston is the wild card because it's so dependent on oil. If oil stays at $57 or drops further, Houston's employment could take a significant hit. If oil rebounds to $70 plus, Houston might actually grow modestly. Right now, it's resilient, but it has the most single point of failure risk. San Antonio is going to keep falling. San Antonio is probably going to continue declining moderately. It's already down 4 to 5% from peak, and with a 52% inventory surplus and the second worst migration collapse after Austin, there's more room to fall. Another 5 to 8% down from current levels through 2025 wouldn't be surprising. The insurance crisis isn't resolving anytime soon. Climate change means more severe weather. Carriers aren't coming back after losing money for years. Expect insurance costs to continue rising 10 to 20% annually for the foreseeable future. Property taxes? Politicians keep promising relief while actual bills keep rising. Expect continued increases of 5 to 10% annually in most metros. Migration determines everything. The migration story is perhaps most important. If domestic migration to Texas stays depressed while construction continues, inventory will keep building and prices will keep falling. Right now, the trend is clearly negative, and there's no obvious catalyst for reversal. Interest rates are unlikely to drop dramatically. The Fed has signaled that 6 to 7% might be the new normal, at least through 2025. That means the rate lock-in effect will persist. This is what homeowners should do. For homeowners who are truly trapped, underwater or close to it with high rates, the calculus is brutal. You probably can't sell without a loss. You probably can't refinance to a lower payment. Your best bet is to hunker down, try to manage the insurance and tax increases, and wait. Wait for your income to increase or enough time to pass that you've paid down principal, and hopefully prices have stabilized or recovered. That could take 3 to 5 years or more. And for potential buyers, this is actually becoming a better market. Yes, rates are high, but prices are falling, inventory is surging, and you have negotiating leverage for the first time in years. If you can afford the mortgage at 6.5%, plus the elevated insurance and taxes, and you're planning to stay for 7+ years, buying in Texas could be smart. Just be careful which metro. Austin seems closer to bottom. Dallas and Houston may have further to fall, and this matters long term. The bigger picture is that Texas is going through a fundamental reset. The pandemic created an unsustainable boom fueled by remote work, migration, and low rates. All three have reversed. What we're witnessing is what happens when a housing market gets disconnected from local incomes and fundamentals. When mortgage and tax payments consume 32.5% of household income versus a historical norm of 23%, something has to give. Usually it's prices. Nick Gurley put it perfectly. So long as Texas remains this unaffordable for local buyers, its housing market will struggle. And right now, with only 42% of households able to afford the median-priced home, Texas is deeply unaffordable. The Texas housing dream isn't dead, but it's in intensive care. Millions of homeowners are trapped between homes they can't afford to keep and markets they can't afford to leave. Insurance costs that doubled or tripled. Property taxes that never stop rising. Home values down 15 to 20% in some markets with more pain ahead. A migration boom that reversed so quickly, it left everyone unprepared. This is what a modern housing crisis looks like. It's not 2008 with foreclosures everywhere. It's qualified homeowners getting slowly crushed by rising costs, falling values, and financial constraints that give them no good options. They're not losing their homes overnight. They're trapped in them, watching equity evaporate and monthly costs rise while the exit door slams shut. The Texas housing market didn't just slow down, it died. And millions of homeowners are trapped in the wreckage, trying to figure out how to survive until it comes back to life. If it comes back to life.